What's going on, guys? It's SquireTrades here, back with episode 4 on August 12th at 3:36 p.m., just about 30 minutes before the market is going to open. Really quickly, I'd just like to say, for whatever reason, episode 2 is going crazy. So thank you to whoever's tuned into that, and thank you to anyone that's tuned in to here. I'm extremely grateful. I'm extremely excited. I planned on making a video on Friday. The price action on Friday was very poor. There really wasn't much to talk about. You can see these 4-hour candles on Friday were just absolutely entirely uninteresting. And then Sunday I was going to give a weekly outlook, but I didn't have much to say, so I figured I'd just throw that in with today's video. And today's price action, shocker, a no news Monday, ended up being, you guessed it, awful. So really quickly, let me just give my thoughts from a weekly perspective. We are currently, from this market structure shift on the weekly time frame, we're in bearish order flow on the weekly on a higher time frame. You've got this fair value gap here that we've dug into. So if you keep one thing in mind, this one simple rule, it'll help you to decide your daily bias and your larger time frame biases, no matter what. This says IRL to ERL and ERL to IRL. You're asking, what does that mean? Internal range liquidity to external range liquidity, or external range liquidity to internal range liquidity, right? Right. So the market is always moving from one of those to the other, or the other to the other, right? Internal to external, external to internal. So let's just think about that for a second, right? The market most recently came down here and swept this external liquidity. And then what? After we sweep external, what do we need to do? Well, we need to find internal, right? What is internal? This fair value gap. So we swept external, left behind our internal. Now we've reached up into our internal range liquidity, and now we need to be thinking back to external. Right here is our closest external target that we have. Although it may not hit this week, it could, but it doesn't have to. This is our new target. And once we break through here, we have so many more externals beneath us. And these could all be used as targets for prices where these are areas where price may retrace, right? So we could, we've made this move down here. We've made this move back into the fair value gap. We could do kind of, take this, retrace, right? It could look something like this. It's not just going to go, price isn't just going to go down, back into the fair value gap, and then dump immediately all the way down to 13,000. You know what I mean? So this is kind of something that I'm hoping for, something that I'm looking for here. So generally going into this week, my bias is certainly bearish after reaching up into this fair value gap. With that being said, let's go in and review today's price action. Again, like I said, it's a no news Monday, so I really wasn't expecting there to be much. What I did see, though, is that we've swept all of this liquidity, and we've just about reached up into this fair value gap, which is what I really would have been interested in, is to see us reach into this fair value gap to confirm my bias for the bearish side. So if we do end up having this bearish price action like I'm hoping for, these are kind of the targets that I'm looking at for potential TPs. Hopefully that happens. We'll see. It's not the end of the world if that doesn't play out, but that's what I'm hoping for. Kind of just to review today's price action. Like I said, it was really miserable. I don't have much to talk about in this video, but I will show you guys what I was hoping for. Like I said, my bearish coming into this week was my bias coming into this week was bearish. So coming into today, we had our 9:30 open, which resulted in this big market structure shift, right? You've got a breaker here as well. And then you've also got this big fair value gap that we created. So I was hoping to just see something like, we'd make this big price leg here, kind of do one of these, and then boom, right? Eventually targeting this low down here. This is what I was hoping to see this morning, and it played out. Unfortunately, if we jump to this next candle, you will see that my hopes and dreams got shattered the next 15-minute candle that we had after creating this fair value gap that I hoped to see a short model on. So there was nothing there. Get rid of all these. Now you have your inverse fair value gap, right? So, you can keep that in mind if you want. I don't really pay too much attention to inverse fair value gaps, but to each their own. Fast forwarding here, you can see that we actually did end up coming and making bullish fair value gaps. If I'm not mistaken, we may make another one. We did not. So this was actually really interesting to me as well. I was looking for a long position out of either one of these fair value gaps here. So if we dig down into the 1 minute chart, you can see price is just starting to build. There's not too much going on. I'm just waiting for a market structure shift with the fair value gap. Price consolidates, doesn't really do much. And at this point, once we broke out of this range here, I originally had one limit order set at this fair value gap here with my stop loss down at this swing low for a 25-point stop loss. Once we continued displacing like so, then I said, you know what, I'll sacrifice a little bit and I'll move my entry to here. Unfortunately, the market makers today decided that they did not want me to gain entry, and that's perfectly fine. I really wasn't expecting much for a No News Monday, and it is what it is. Kind of however price ended up playing out, I didn't really concern myself with it, but had price ended up wicking us in somewhere down in here, this trade actually would have ended up being a great trade for more than 2R, which I would have been extremely happy with considering the time of day. I start trading at 8 a.m. I stopped trading at noon. So my window, as you can see, was about 11:49, 11:50 when this set up. So my window was very quickly, very swiftly coming to an end. But I was hoping to squeeze in a little 2R win to get the week started off strong and carry that momentum into the rest of the week. Hopefully, we get some nice price action as we come into. We have news tomorrow at 8:30. We have news on Wednesday, and we have news on Thursday, and then a no news Friday. So what I'm really hoping to see the next couple days is just movement in the market, and I really don't care, to be honest with you guys. I really don't care which way the market goes, because as futures traders, we're able to make money regardless. So I would just prefer the market to pick a direction for me here and just decide, what are we going to do? Because we've came back to equilibrium of this price range. And as I mentioned earlier, we may want to grab this internal liquidity right here at this fair value gap. Maybe. We don't have to, but we might. And if that's what needs to happen, then I hope that happens in tonight's overnight session, because to be honest, the price action the last, end of last week and even today, it's been awful. I just want to see something. Give me a little bit of opportunity. Give me some movement. Give the people a chance. And it's okay. There'll be days like that. You're not supposed to trade every day. I don't trade every day. My trading partners, most of them don't trade every day. You're not supposed to. As traders, we need to be able to identify in what conditions are we probable to win, and in what conditions are we most probable to lose. And one of the key things for me is most certainly news. For me to win consistently and to take higher probability setups, I need to see volatility. I need to see the market moving. I need to see it moving efficiently in one direction, not chopping, for just one session. That's all we ask for. And we'll see if we get that. But at the end of the day, as traders, another thing that we have to be is observant. We don't come into the market every day thinking, you know what, I'm going to trade. I'm going to make a trade today. I'm going to take a trade, you know. There's no pressure. We don't have to take trades. We don't have to force bad executions or force a model or dig down under our 1 minute time frame and see what we can play, you know, because the 1 minute time frame, it does not matter. The 15-minute chart, the 4-hour chart, and your higher time frame charts are what matter, and the 1 minute is all noise. Without your higher time frame bias, without your higher time frame models, you have nothing. You have nothing. No one sits here, no professional trader that's managing millions or billions of dollars goes, oh, where's my next 1 minute market structure shift fair value gap I can exit off of or enter off of? No, dude. That's not how this works, man. Get off of the 1 minute chart. Do yourself a favor. Pay attention to the 15-minute. Maybe execute on the 5-minute. For me, for a long time, I just sat on the 1 minute and I was trading every ICT model and it was awful. You take so many losses, and after taking so many losses, you trim your winners too quickly, and then your win percentage sucks and your risk to reward sucks, and you're just not a profitable trader and you suck. And that's that. But if you use these higher time frames to your advantage and you keep the noise out and you look and you observe and you realize when the market is in a prime condition for you to execute and for you to win, and when the market is moving on the 15-minute chart and when the market is moving from a 4-hour perspective, right? That is when we want to be playing. We're not interested in playing every single 1 minute move, because you're just going to get chopped around. You're going to lose all your money. You're going to blow your accounts. You're going to switch strategies every other week. You're going to cry and complain, oh, this model doesn't work, you know. And I've been there. I've switched models every week. I did that. I've been at this for years. And you know what? You just got to find one strategy. You've got to stick with it. And you've got to let the probabilities play out. You're going to lose. I lose. Every professional trader ever loses. Hedge funds lose. Everyone loses. There's no strategy that's going to give you a 100% win rate. And at the end of the day, you have to come in and keep swinging the bat. Keep swinging your golf club. You know, if you have a good enough risk to reward and you have a decent win percentage, it doesn't matter if you take 2, 3, 4, or even 5 losers in a row, because you know what? You just trust the numbers. You let the probabilities work out. You take good executions and you stay patient. And eventually, you're going to keep winning, and the odds will be in your favor over time, over the course of months, over the course of years. You will be profitable. Quit trying to make money today and think about making money in the long run, in the next couple months, in the next quarter, and by the end of this year, you know? Anyways, sorry for my little rant. Sorry for getting passionate. But I care about this stuff, and this stuff consumes me. I think about this all day, every day. It's what I do. And one day, it will be what I do full time. Thank you guys for listening in to the 4th installment of Road to Becoming a Full-Time Trader and Quitting My Salary Position to do this. Thank you so much. I hope you guys had a great Monday. I hope you have a great Tuesday. I hope you have a great rest of the week. And yeah, it's been SquireTrades. Thank you for tuning in to episode 4. We'll see you tomorrow for episode 5.